Great.
Hey everyone, welcome to today's webinar. Happy Wednesday. It just turned 2 p.m. Eastern and I see that we have people coming in. We're just going to wait a minute so that we had a very large amount of responding people to this, a lot of registrations. So we want to make sure everybody gets in before we get started. You want to drop in the chat where you are doing condo loans. We're curious to know where y'all are located and where all of your condo loans are. Pop them in the chat. New Jersey. Any New Yorkers? Columbus, Ohio. Where else? Do you see a lot of condos, Oris?
These days all over the country, but Florida,
Everywhere.
Texas, we have Maine, Vermont, Massachusetts. Oh my goodness.
Yeah. Well, no, yeah, Florida's. I knew Florida. DC, New
DC,
Hampshire, Massachusetts. All right, yeah, all the Northeast.
all our spots, all our spots.
Yeah, all the regular suspects, right?
Yeah.
All right, we'll go ahead and get started. Today's condo webinar is called Insider Tips on How to Get Condo Loans Closed Faster. And we are lucky to have here with us today Oris Tomaselli, who is the President of Project Review at CondoTek. CondoTek is one of TMC's preferred partners, so we're super excited and grateful that Oris can spend some time with us today here. We are going to take questions, however, they will be at the end. So as Oris goes through his presentation, if you have questions, drop them in the chat, and at the end, he'll go through and answer what he can. And if he can't get to all of them, we will send a follow-up. Well, I think either way, we're going to send a follow-up email with the recording of this, excuse me, copy of the deck, and any other information that you would need. So with that being said, Oris, I will pass it over to you. Thank you.
Thank you, Amy. Wow, so happy to be here today and glad we have so many registrants for this event. We're so happy to be a partner with the Mortgage Collaborative. It's been many years now, and we've gotten so much value out of it and been able to help so many people. So thank you to everybody who is also a partner. We're excited to be part of that team. So today's going to be interesting. This is a 30-minute outline on, a couple of tips on how to get your condo loans closed faster. And what we're going to kind of dribble into this discussion today is what's happening in the marketplace, because there are a lot of industry rumors right now about what's happening with Fannie Mae and Freddie Mac lending guidelines, and if there is an upcoming guideline change and what changes are on the horizon and how that's going to impact residential condominium lending in the United States. So I thought it was really important to kind of give you an outline of what we've heard in the industry and provide you with a little bit of guidance down that pathway. So without further ado, let's jump into this. So what's going on in the marketplace? Well, so we're probably 4 or 5 months kind of into Fannie Mae and Freddie Mac's new systems where they are clearing condominium properties for approval or for lending. And we're really happy with it. A lot of our lenders are really excited when you pull it up in CPM and you see a condominium property that's already been reviewed by the agency, or conversely with Freddie Mac, and you have a little bit of an easier path for approval. So we're really happy with how the agencies have responded based upon their guidelines and the difficulties that we're seeing in this marketplace in getting condominium loans closed compliantly, right, with agency lending guidelines intact and with the reviews that have to be performed on these properties. Not to say that it's not difficult, because it's been difficult to align with all of the various guidelines, whether it's insurance or deferred maintenance or critical repairs, or special assessments or reserve issues. We've seen a lot of issues that have really kind of halted condominium lending in many properties, especially when We see so many properties that have been added or designated as unavailable for lending. So let's get to that point. As of June, because in June, Fannie Mae stopped allowing lenders to download a complete list of every single property that was ineligible for residential mortgage financing. So the last piece of data I think that anybody has globally throughout the country is that June date was the last date for download. But at that point in time, there were 5,500 plus condominium properties that had an unavailable for lending designation. At the time, and from what we're hearing, more than 200 condo properties are added monthly. There's been a couple of months where we saw 300 or 400 condominium properties being added to the unavailable for lending designation. And that's a lot of properties. We anticipate that that list is going to grow. And I'll tell you why in a second, but there's a couple of reasons why it's going to grow, but primarily you're seeing that a lot of states are, we could focus in on Florida and New Jersey as two examples because we have folks that are, doing loans in those states on this presentation. But in Florida, the requirement for a structural reserve study to be performed and the data that's coming off of those reserve studies, we're seeing lots of deferred maintenance, lots of critical repairs that are incomplete, reserve funds that are completely depleted, reserves that are woefully underfunded, um, on a yearly basis. And there are homeowners seeing massive special assessments in Florida as a result of those reserve studies. Of course, that all goes back to, the tragic collapse in Surfside, Florida, of the condominium property. But that's really impactful right now. And I think the last count was there were over out of that 5,500, I think the number was about 1,400 of those properties were in Florida. And lots are getting added because there's lots of data there. Now, the same thing is starting to happen in New Jersey, where their reserve study legislation went into effect in 2025, and we're seeing a lot of properties come back with structural issues, just like we saw in Florida. Probably not to that scale yet, because we're just starting to see those reports, but it's really impactful. And you should know that I also sit on CAI's Government Affairs Committee and CAI's Reserve Study Best Practices Committee. And we know that there are a lot of other states that are just about to pass legislation requiring reserve studies and structural inspections. So New York being one of them, the city and state where I sit. So we know that there's going to be difficulty down the road because we know that there are properties that just haven't maintained their infrastructure appropriately, and don't have enough capital to sustain the repairs that are needed to be done within those properties. But the bright side of this is that agency data is really getting better. They're really kind of honing in on good developments as well and good properties. And we're seeing a lot more clearances in the agency systems, and they're really doing a good job of reviewing those properties to ensure that residential lending is available in those properties that are in good standing. So I kind of like that. I like the idea that eventually, who knows how many years from now, but you'll have a much easier pathway to condominium lending. And I'm not a naysayer here. I think it'll happen more quickly than we think it'll happen because the agencies are really working on ensuring that, they're reviewing a lot of condo properties across the country and clearing them. But there are those difficulties that I just mentioned, so you kind of have to take that with a grain of salt. There is, and again, there's some impact here from the agency clearance of these condo projects. We're seeing that a lot of our lender partners out there who utilize CondoTek services, either getting our condo packs to get documents quickly, and cheaply and efficiently, or to utilize us for kind of the full suite of services, and having us do the condominium reviews and warrant the eligibility of these condo projects back to the lender, we're seeing, that this is kind of starting to have some impact. Like, the same sites are being lent in and are getting to the closing table quicker. And it's going to be kind of part of what I'm talking about today too. Um, there's a little bit of interesting kind of rumor in the industry right now about what's going to happen in 2026 that I think is important to discuss. So we're hearing murmurings, and we've heard of this for a while, but this seems to be, something that's going to come to, fruition, which is that limited review may disappear. And I think the thought process there is there's a disconnect, right? Where if you have to do a full review, you have to review a budget, you have to review the reserves, um, and of course you review critical repairs and deferred maintenance in a full review, and you also have to do that in limited review. But there are so many properties that have kind of skirted by getting a limited review loan in them where their budgets were never reviewed. Their reserve line item was never reviewed. And that's really interesting because I would get these questions, these emails. Well, how come somebody, XYZ lender closed a loan in here yesterday and I can't close a loan in here today? Well, you don't have a 10% line item in the operating budget for reserve. You don't have a reserve study in this particular property. And they either could have gone limited review or they could have gone, straight to a portfolio loan or a non-warrantable loan is kind of my standard answer that I give. And there was that disconnect in the industry where we would have originators, furious because, with the lenders they work for because they couldn't lend and, another lender, provided a mortgage yesterday in the same property. So there was always that disconnect with limited review where, why does that happen? Why do the agencies let that happen? And from what we understand, that's going away. Limited review is likely to disappear in 2026. And based upon our calculations about just by the projects that we see, and granted, we see anywhere from 1,500 to 2,500 condominium properties per month, about 65% of the reviews that we're performing are limited reviews, right? So if that's any indication of what's happening in the industry with lenders, that's a big shift. And that means that lenders are really going to have to focus in on, having the staff to do full reviews, having the underwriting teams to do full reviews, or to utilize some of the industry vendors who are out there, like us, in fact, to do their reviews for them when when limited review eventually does disappear. There's also discussion about the agencies requiring a higher reserve requirement. And there may be a kind of um, a long-term kind of change in these guidelines where they might come out in 2026 and not be in effect to 2027. But there's talks from what we hear for reserve guidelines going from 10% to 15%. And that's incredibly impactful. I mean, very frankly, you're seeing costs for associations go through the roof, right? We're seeing maintenance fees rise in huge numbers, especially in states like Florida and New Jersey as a result of the reserve study requirements or structural reserve studies. But also just as, a part of inflation, right? We're seeing insurance costs skyrocket over the last 24 months. And maintenance fees are skyrocketing. So it's going to be a difficult time should that guideline pass, where we now have to go back to condo boards and say you're not reserving enough at 10% and you have to increase your line item to 15% or get a reserve study that proves that you don't need to put in 15% or that you need the appropriate amount, maybe even higher than 15%, dependent upon how much work that has to be done to that property. So that's kind of what's going on in the market. There's a lot of discussion around this right now with not only the agencies, but the various industry groups out there, and some of the large national lenders. But this is really impactful. So when we came up with this webinar, we thought, well, let's give everybody a couple of tips and tricks and give them our ideas of how to kind of manage their way through this process. If these guidelines come out and if they don't come out, doesn't matter. We're still gonna give you some tips and tricks. So first things first, this is our data from this summer. We took a month this summer. I forgot it was June, where we took a month's worth of reviews. We took 1,000 properties that we reviewed. And I presented this at the Mortgage Banker convention, or the Mortgage Banker Roundtable, Condo Roundtable in DC in July, to most of the nation's lenders, where we looked at what the reasons were for ineligibility. And out of that 1,000, about 36% of those properties were ineligible because of association insurance being non-compliant. About 23% was because they didn't have an appropriate budget or reserves. About 16% was because of deferred maintenance or critical repairs. About 13% were initially ineligible for fidelity insurance, and that fidelity insurance is an issue that comes up pretty regularly because it's tied to how much you have in your reserve account, right? So we can often clear the fidelity insurance issue, and about 7% was because of a special assessment. And frankly, it wasn't just because of a special assessment, it was because a special assessment, it was a red flag that there were additional critical repairs or deferred maintenance, and the special assessment wasn't paid entirely, and the work wasn't performed to the property. So these are the top 5 reasons for ineligibility. And I should say initial ineligibility, because in many of these instances, through our condo project warrant product, we were able to clear a lot of these issues, either working with the association or the lender in order to clear the insurance issue, or outlining what the reserve issue was, and the board came over the top and put a 10% line item in, or whatever the solution was that we were able to provide. In many instances, we were able to provide it, but certainly not in all. And you should know that there are still many condo properties, 5,500 on Fannie's list as of June, but there's a lot more out there that are just totally non-compliant, and from what I've seen, aren't going to be compliant for a long time. Some of them, we're seeing a 2 or 3 year period of time before they actually get compliant. So this is important data for you. So the consequences have been, unit values have started to drop, right? If you're in an ineligible property, in some areas in Florida, we're seeing 30 to 40% value reductions in some of these properties with massive special assessments. There's limited buyer financing options. I mean, sure, there's non-warrantable, but as you all know on this call, you can't always get a non-warrantable loan done, especially in a property that has massive special assessments or critical repairs or litigation on it. So there are properties that are completely unfinanceable right now. There's an increased cash or portfolio lending options, and we're seeing portfolio lending, and there are quotes around that, where we're seeing some of the bigger lenders provide jumbo mortgage financing to some of the totally non-warrantable sites. Let's call it, in Florida, New York, and the multi-million-dollar loans out there that are running outside of Fannie and Freddie's guidelines. But even on the portfolio side, I mean, there are lots of big box lenders that if you have ineligibility as a result of critical repairs or deferred maintenance, they still won't lend in portfolio, regardless of what your down payment is or your LTV is. And we're seeing that, happen more and more with the big lenders out there. So there's this immediate pressure on boards to fix the problems, and property managers. And I could tell you, we are working within the industry with large property manager groups in order to kind of get to the bottom of this. And it provides, some sort of relief or some sort of direction, I should say. We have a product that we launched last year called, the Lending Compliance Report, which allows property managers to kind of, we do, for a small fee, we'll do a complete review for the board and tell them how to get the property fixed. It's almost like a pre-flight. And to get these properties kind of in line before mortgage financing, really becomes an issue. And so the boards know what they have to do. And we're starting to see some of that happen. And we're starting to see some of the large management companies really kind of take this under consideration and ensure that their insurance policies for these properties are compliant and reserves are being collected. I'm getting more calls right now regarding budgets than ever before, and it's because it's budget season for a lot of these condo properties across the country. Like, how do we make this compliant? How do we get Fannie Mae and Freddie Mac to lend in this property? So there's a lot of difficulty in lending, and what we're finding is, there's some tips and tricks here. So some of these may seem like, oh, of course this is what we do. They may seem things that, it's almost like, it seems like a dumbed down list. It's not. I will tell you that ordering condo docs immediately upon intent to proceed is incredibly important. I mean, not you'd be shocked to know that not everybody does this. Like, it goes into a lender's processor. Condo docs take, 4 or 5 days to order for whatever reason, whether you're trying to get the, prospective borrower to pay for it, or whether you're, have to wait for an invoice to pay for it. At CondoTek, we've tried to solve all these problems where you can instantly download an invoice for your borrower. We have a one-time flat fee for condo docs. So regardless of what a property management group charges for, a questionnaire or additional documentation, your borrower and the lender pays the same fee. So that's we've kind of tried to take away a lot of the problems that exist as a result of this. But I will tell you that ordering it instantly and making it part of your process and standardizing the process of ordering condo docs is probably 50% of the battle. The next kind of best tip or trick is if you are an originator or a lender and you happen to have connectivity with a property management group or a specific group of condominium properties, pre-flight them, review them prior to writing loans in that property. Make a list, the top 10 properties that you can lend in, and do your due diligence, whether that's internally in your organization by ordering the condo docs and doing the review on these properties prior to taking in any loans there, or by utilizing resources like CondoTek or any other firms that exist out there. I don't think there are many firms that provide that lending compliance report kind of pre-flight like we do, but if you can find them, have at it. I think that the pre-flight is probably one of the best way to clear these properties and ensure that you have very fast and quick closings. And all you have to worry about at that point is, credit and appraisal, right? So, in those instances where you can have that connectivity, work with the board or property manager in order to pre-flight that site. Utilize the industry resources that are out there. So look, the agencies are not dumb. They have the internet too. So, and I could tell you from personal experience that when you send a property in through PERS or even for, a review by the agencies, they're going to Google that project. They're going to see if there's any litigation on it. They're going to see if there are any issues on that property, whether there are violations on that property. The internet is an incredible place. You can find out an enormous amount of information in a couple of seconds. And I know we're, I don't know, 20, 25 years into the internet, maybe 30, who knows? But I will tell you that it is utilized on a regular basis. So if you're originating a loan in a condo property, take the 2 minutes and do a search on that property, and don't just look at the front page of Google. go do a deep dive, look into it, look to see what violations may exist out there. It may lead you to the critical repair issues that you're searching for. It may lead you to a clearance on some of the issues that could come up during the underwriting process. So, it's an incredibly important part of the process. And we like to try and get originators to do this so they can bring it to processors and underwriters and say, hey, look, you may have found this, but this is how it's cleared. So they can maybe ask the questions of the property managers before the loan gets into process. Contact these property managers, prepare listing and selling agents early, pick up the phone and call them, say, who did the last loan in this building? Are there any issues in this building that you're aware of? And if there are, get plugged into the board, get plugged into the property manager to try and fix those problems. Sometimes a little extra due diligence is worth it. We have so many connections in the industry with property management groups. We can typically get condo documents. I think our average is like 4.9 days, based upon our connectivity and ability to get these, in our relationships. I will tell you that in many instances, we've been able to kind of resolve these issues just by doing it more quickly, more efficiently, and looking and just getting a property manager to answer all the questions on the questionnaire. It's like 90% of the battle. And then finally, standardize the process. If you don't have a standardized process in your organization, make sure it is. Make sure that, upon, intent to proceed, that condo docs are ordered immediately, that the process is locked down. We have lenders that have it wired into their software that the day they get an intent to proceed from a client, an automatic order goes out to us. So it's possible out there. And those lenders close condo loans much quicker than the averages in the industry. Outside of that, I wanted to just outline the following. Look, we essentially have three main products here at CondoTek. Our Condo Pack, which is our docs only product. And again, we're often less than our industry average is 5 days or less in getting condo docs to our lenders. Complete packages are as complete as necessary in order to make a decision about that property. The add-on product is the Condo Project Warrant, where we also review those condo docs and tell you whether or not that project is warrantable. We also warrant that decision. So it's on us if there's a repurchase on that property, or on that loan. And then we provide that pre-flight lending compliance report. Outside of that, of course, we provide PERS approvals and FHA approvals and VA approvals to the industry. But we've really become the experts, and now we're also listed on Fannie Mae's website as being a approved data provider. So I don't think you can get closer to the process than us right now, and we're happy to do a demo for anybody or provide any information we can. So that being said, you can contact me at any time. I'm happy to provide you individual tips and tricks or answer a question if I can. And let's see if there are any questions here. Everybody will get a recording of this and a copy of this presentation. I don't see any questions, which makes me think that I kind of did a good job. I don't know. Are there any questions? I'll open it up for a couple of questions here. If you want, type it into your chat.
Yeah. Hey, there are some questions in the Q&A. So how can we as MLOs conduct a reliable condo pre-screen at the pre-approval stage?
Yeah, I mean, so it's funny. You could either do it internally, right? It depends on your organization. I have seen some lenders do that internally where they have that, ability for, an originator to pre-flight a property. We do it at CondoTek as part of our lending compliance report product. For $995, we contract directly with the a property manager and or condo board, and they typically hire us and we pre-flight the property and give a complete analysis on whether the property is warrantable with Fannie or Freddie. We also give them a roadmap to how to fix any problems, which is probably the most valuable piece of that report.
Okay, next question. What resources are available to us as MLOs to research uneligible properties? What is pre-flight? Is that for MLOs? How much does it cost for that service?
I think I answered the last two questions in the first question, but
Okay.
what resources are there? Right? I mean, look, you have resources that are available out there through organizations like ours. Again, I don't know what you have internally, but there are resources out there like like the lending compliance report that we offer. Um, so they exist. Oh, one of the big parts of the questions, how do you find out if a property is on the list? Well, if you are not a Fannie Mae seller servicer or don't have access to CPM, it gets kind of hard, right? You would have to go through one of your investors and ask them to look up the property. Fannie Mae stopped providing a global list in June, and where you could kind of search in an Excel spreadsheet all of the properties that were ineligible. Um, and that's causing an issue in the industry. I'm pretty sure that was by design by the agencies. They want you to look up properties individually.
This one's about insurance, property insurance with a co-insurance clause despite insured for replacement value. Is this a problem?
It could be. Look, on insurance questions, I do this. If you send us the specifics, or order a condo pack or order a condo project warrant on it, we do a complete insurance review. I'll tell you this. One of the biggest asks in the industry right now is for us to do a standalone insurance policy review. And what our response is to that is it's included in our condo project warrant. We do the deepest dive you can do to determine if insurance is compliant. And we'll not only do we do the deepest dive, we call up the insurer, we call up the carrier, we work with the board within that process in order, if it's not compliant, to get it compliant. So happy to review it through a condo project warrant should you wish.
And then there's just a couple in the chat. I don't know if
Oh
a condo.
yeah, this I have access to. So let me take Lori's question first. Who had other loans for the same condo community recently approved? Do you still need a new cert? Well, unfortunately, the answer is yes. I mean, you want to look at your internal policies on this. It depends if you're selling a loan to a secondary market investor. It depends if you're selling directly to Fannie or Freddie. But as a kind of rule right now, as a result of critical repairs, deferred maintenance, litigation issues, we're seeing that every lender, the lenders that we work with, are reviewing every loan at the point in time of origination, regardless if it's in the same community and a month apart, right? Um, I know it sounds crazy, but litigation pops up quickly. Critical repairs issues pop up quickly. Now that it's budget season and budgets are changing, ensuring that the budgets are compliant for 2026 is really important um, and critical in order to avoid a repurchase. So yeah, it's kind of the worst time of year to ask that question. And really, really important to do those reviews kind of individually. Oh my goodness, Brittany, thank you. CondoTek does a great job obtaining and required insurance endorsements and confirmations of coverage. Woohoo! Love that. um, there is I'll take one more question because I think we're past the hour. So the last question I saw here that just popped up is Fannie Mae has a condo as a new construction, and we get a questionnaire showing it's been complete. So we need to go back to Fannie Mae to update, or can the lender review since the status with Fannie Mae is not available? Huh. Interesting question. Um, I have to tell you, I'm going back to Fannie Mae on that one. Um, I'm ensuring that my loan is going to be saleable. Yeah, you know, that's a tough question. If it's me, I'm ensuring that Fannie Mae is aware that the property is complete and no longer listed as a new construction property. I have had lenders though kind of go completely the other way and say, well, it's now complete. I don't have to treat it as a new construction property. But in that instance, if it's me and if it's my repurchase on the line, I'm going back to Fannie Mae. Anyway, so that was the last question we're going to take today because I hate to keep people on for so long. Thank you so much for coming in. If there are any other questions, I'm going to try and answer them in an email that goes out to everybody today. Um, I'm sorry, that's going to go out to everybody tomorrow, along, Amy, right, with a copy of the presentation and a recording of it, right?
Absolutely. Yeah, we'll do, we can do a copy of the presentation deck as well as the recording of this session. So, Oris, thank you so much. As always, extremely knowledgeable and helpful for all of you going through the difficulties of trying to get condos approved. I've been there, former New Yorker here, so living in the world of condos. But thanks everybody for registering and for showing up. And for those of you who didn't register, I'm sorry, for those of you who weren't able to make it, we will get this recording over to you. Or have a great day. Thanks again. Thanks for being such a great partner of TMC, and we look forward to the next one.
Same. Thanks, everyone.
Bye, everyone. Have a great Wednesday.